It's clear that there's been a lot of crypto carnage and a lot of broken glass and a lot of pain for Bitcoiners, even more pain for non-Bitcoiners or crypto token people, right? Where they watch their Terra and Luna go to zero, and a lot of crypto banks closed their doors and went to zero. So we have seen a crash to zero of lots and lots of things in the ecosystem, but I think this is a necessary maturing process for the industry. And the one thing that I think is probably just the most auspicious is that there seems to be broad-based consensus on two things. One thing, that digital assets are here to stay, and that the entire world needs to embrace the crypto economy one way or the other. And the other thing is that the one crypto commodity that exists in the world that's universally agreed upon is Bitcoin.
The year 2022 is likely to go down as one of the worst ever in the blockchain industry's volatile history. But for scammers trolling digital asset markets for suckers or even easy pickings from savvy crypto traders, it's been a banner year. Hello and welcome to Money Talks. In today's video, Michael Saylor updates about the current state of crypto market following FTX collapse, the future of Bitcoin, and regulations.
But really makes you angry when you read about, say FTX that collected billions and billions of dollars, but never bought the Bitcoin, actually. So why is this a problem? If FTX stole billions of dollars in a BlockFi and Voyager and Three Arrows and Celsius and Terra Luna, if all of those ecosystems basically collected people's money and then lost all the money, then people that legitimately wanted to own Bitcoin had their money stolen from them. So what you had was you have the very careful Bitcoiners that bought their Bitcoin and still have their Bitcoin, and then you have a lot of more casual Bitcoiners that maybe they bought the Bitcoin and deposited in Celsius to get some yield, and now they lost their Bitcoin. And I think that that's tragedy. I mean, it's bad for them, right? It's awful for anyone who had their money stolen from them. And it's not good for Bitcoin because billions and billions of dollars of Bitcoin was stolen and / destroyed, right? I send you $20 billion to buy Bitcoin. You take the Bitcoin, you steal the money, and the Bitcoin doesn't get bought, right? Or I send you 20 billion worth of Bitcoin, and then you loan it out to someone that invested in Terra Luna, and Terra Luna goes to zero, and then the Bitcoin never comes back, And so what happened? They converted the Bitcoin into Terra Luna, or converted the Bitcoin into FTT or the equivalent, and then that went to zero, right? So that kind of makes you mad.
Sam Bankman-Fried will spend the holidays with his family in Palo Alto, California, after his parents secured $250 million in bail funds with the equity in their home. Among the conditions of the bail are home detention, location monitoring, and his passport surrender. The former FTX CEO signed surrender documents on December 20th, allowing his extradition from the Bahamas to the United States, where he faces 8 charges that could keep him behind bars for the rest of his life. Bankman-Fried will now wait for his sentence at home with his family.
FTX invested $5.6 billion in FTX Ventures. They must have spent another $2 billion in marketing or more in the 2 years. So they poured about $7.5 billion into the economy, and they did it by, in essence, counterfeiting $10 billion or more worth of tokens like FTT and SRM, and they boosted Solana, and they boosted Maps, and then they went and they borrowed real money. They borrowed as much as they could, posting that collateral from counterparties that, they borrowed from BlockFi and, borrowed from Voyager and probably borrowed from Three Arrows, or they borrowed from anybody that would have made a loan to them. And then they borrowed from their own depositors at FTX. And of course, they then raised billions of dollars from outside investors. And they took all that money and they in essence corrupted everybody they could, right? So you give 45 million to Block, right? $45 million to what, a handful of journalists. What could go wrong, $15 million to one influencer who will remain nameless that everybody knows. And and then you give it to every politician on both sides of the aisle, and then you give it to all of the academics. I think it'll be probably 3 to 5 years before we know the extent of that corrupt money. But I don't think that there are many people that weren't tainted. They went to pretty much every crypto influencer, every journalist, every politician, every entrepreneur, everybody every educator, everyone that would take their money, every celebrity, right? So, just about anybody that would take their money, they went to them. And, if you read the FTX Ventures spreadsheet, it's like 8 pages long, and they invested something in hundreds of things, right? Hundreds, it's hard to figure out who in the industry didn't end up with some of that money.
Former Alameda Research CEO Caroline Ellison and FTX co-founder Gary Wang have pleaded guilty to federal fraud charges. Ellison, however, is working on a plea deal with the Office of the United States Attorney for the Southern District of New York, which would evade all 7 charges against her, resulting in a $250,000 bail bond and prosecution only for criminal tax violations. The agreement doesn't provide protection against any other charges that Ellison might face from other authorities. Wang and Ellison are reportedly cooperating with U.S. authorities on investigations related to FTX's collapse.
If you just gin up $7.5 billion worth of, FTT token, right? That's made up money. I mean, Sam pretty much created that money in 12 months, maybe 18 months max. In order to create another $1 billion, he just needed to manipulate the price up $3 a token. How hard is that? Not hard at all. He basically took the money from his own customers off the exchange, traded it with himself, manipulated the price up $3, declared $1 billion worth of earnings, and then went and spent it. And how he spent it, he bought everybody. So I think that's the negative. I guess the positive is we got lucky that FTX blew up because they were very close to bribing, or corrupting the entire establishment. Right. We'll see just how far they got. But I mean, some of the bills in Congress, they were driving to get light regulation in DC and then funnel crypto exchange fees into the regulators in order to addict them to more counterfeit crypto money.
Binance US is set to acquire Voyager Digital Assets for $1 billion with a bid of $1.022 billion. Binance US will acquire the assets of bankrupt crypto lender Voyager Digital. This sale, however, is subject to a creditor's vote and closing requirements. A hearing will also be held by the presiding bankruptcy court to approve the purchase agreement on January 5, 2023. In good faith, Binance has agreed to deposit $10 million and reimburse Voyager for certain expenses up to a maximum of $15 million.
Exists so that the Sam Bankman-Frieds of the world can't print their own token, do insider wash trading, manipulate the price up to $8 billion, and then tank it to zero overnight. That's why the laws exist. He could have never operated the exchange. Alameda would be out of business, FTX would be out of business, and the FTT token would be out of business if they had actually had to file a registration statement with the SEC. Because those were all insider conflicts of interest, and there's nothing ethical or legal about any of it, right? And so they couldn't have done it. And so the reason that it makes sense to file registration statements and take equities public is in order to avoid these kind of FTX, FTT frauds that basically destroy people. Now, there's a big there is a stigma attached to related party transactions in public companies, rightfully so. because Alameda was a related party to FTX, and FTT was a related party. So Sam Bankman-Fried is the issuer of FTT, is the owner of Alameda, a hedge fund, and is the operator and owner of FTX. Those were three related parties. The reason that there's a stigma is if you took FTX public and you said, by the way, FTX accepts FTT, which is a related party issued token, and it does business with Alameda, the question that a skeptical investor would have is, well, since the same person controls all three, is it possible that he actually wired the systems to give himself an advantage? And if it turns out that Alameda has $1 billion trading loss, will Sam Bankman-Fried, the CEO of FTX, liquidate Alameda in order to protect the interest of the other customers? Or will Sam not liquidate them to protect his own interest? He has a conflict of interest. Mm-hmm. And we know how the story ends. By the way, the other question would be, since Sam has billions of dollars, $8 billion worth of FTT token, will Sam, the CEO of a bank, issue credit against the $8 billion of the token that he issued himself and give himself preferential treatment? Or will there be an arm's length transaction? So here's an interesting question, Daniel. If you were an arm's length, if this was an arm's length relationship and there was a disinterested financial executive running FTX, how much credit do you think they would have extended Alameda for $8 billion of FTT token?
Nowhere near what they did.
Yeah, we know they gave them billions and billions of dollars of credit, right? Mm-hmm. Maybe up to $10 billion of credit.
Well, how much did you get as a bonus?
Bitcoin prices dipped below $16,700 at the end of the week after recovering some ground on the previous day. A Santa Claus rally for Bitcoin is unlikely to happen, as the mood among some pundits is firmly bearish. Pseudonymous Twitter user Dan Crypto Trades called attention to Bitcoin's yearly close, which is likely to be Bitcoin's third negative performance year. The percentage loss this year is sitting right in between the other two negative years, between 2014 and 2018, he noted on Twitter.
Incompetent person. Okay, what could go wrong? Well, when you have three related parties and a biased, incompetent, dishonest person, so what can go wrong is the entire thing gets burned to zero. And is that likely? Yes, highly likely. It's not even just what could go wrong. It's highly likely. That's the reason there's a stigma attached to related party transactions. You would never want the CEO of a bank to be issuing loans to a private company that they owned, right? I mean, like, if it turned out that the CEO of JP Morgan was issuing billion-dollar loans to, to Jamie Dimon, real estate development company, jointly owned with him and his wife, right? People would just lose it. Right?
Yep.
So, do you agree with Michael Saylor's take on the FTX crash? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.